Hi, and welcome back to the Food Fund, where we analyze investing in food, beverage, and restaurant stocks. What is the best food and beverage ETF or exchange-traded fund? In this video, we will be exploring the First Trust Nasdaq Food and Beverage Exchange-Traded Fund. ETFs provide an easy way to diversify your holdings, but is it a good investment? Let's find out. We have a lot to cover, so let's go ahead and jump right in. Cue the logo. So, let's talk about the First Trust Nasdaq Food and Beverage ETF, ticker symbol FTXG. This ETF offers investors exposure to the food and beverage industry. It tracks the Nasdaq US Smart Food and Beverage Index. Now, what does smart mean in this context? Well, it's not about AI-powered burgers, though that might be the future. Instead, it focuses on factors like volatility, value, and growth to select and weigh its holdings. Let's look at some key facts. This ETF is issued by First Trust and launched on September 20th, 2016. So, it's been around for a decent amount of time, giving us a good track record to analyze. FTXG has an expense ratio of 0.6%. This means that for every $10,000 invested, you'll pay roughly $60 in fees annually. At the time of production, the ETF has around $24 million in assets under management. To put that in perspective, the S&P 500 ETF, SPY, has around $625 billion in assets under management. Clearly, FTXG is a relatively small ETF. As mentioned, this ETF tracks the Nasdaq US Smart Food and Beverage Index. This index uses a quantitative rules-based methodology to select and weight companies involved in the production, distribution, and sale of food and beverage products. The smart beta focus of this ETF means it's not just a market cap weighted index. It's trying to outperform the broad food and beverage sector by focusing on those specific factors. ETF.com describes FTXG as a liquidity selected, multi-factor weighted index of U.S. food and beverage companies. It is a liquidity selected fund of 30 U.S. food and beverage companies. These companies include brewers, distillers and vintners, manufacturers, distributors, and packagers of food and beverage products, and companies that grow crops or raise livestock, operate fisheries, or own non-tobacco plantations. The 30 selected constituents are then ranked and weighted on three different factors. 1. Strong growth, as exhibited by 3, 6, 9, and 12-month average price returns. 2. Attractive value, evaluated by cash flow to price. And 3. Low volatility, based on historical price fluctuations. So now that we know how the ETF works, let's look at performance. As always, past performance is not indicative of future results, but is crucial to understand how this ETF has behaved historically. A backtest comparison of investing $10,000 in FTXG versus the S&P 500 reveals significant underperformance for FTXG in this comparison. $10,000 invested in FTXG would have grown to $13,190, or a 3.48% CAGR, while the same amount invested in the S&P 500 would have grown to $30,759, or a 14.91% CAGR. This demonstrates clear underperformance for FTXG. The ETF's investment would have been less volatile, with a 14.61% standard deviation compared to 16.01% for the S&P 500. FTXG underperformed the S&P 500 in terms of best year performance, with FTXG growing 23.98% versus the S&P 500's 31.22%. FTXG also outperformed the S&P 500 in worst year performance, falling 12.06% versus the S&P 500's 18.17% fall. In terms of maximum drawdown, FTXG fell 21.74%, less than the 23.93% max drawdown for the S&P 500. FTXG massively underperformed the S&P 500 in comparisons using the Sharpe ratio, with FTXG at 0.16 and the S&P 500 at 0.82. FTXG also significantly underperformed the S&P 500 in the Sortino ratio, with FTXG at 0.23 and the S&P 500 at 1.26. Clearly, FTXG was a poor investment choice when considering the S&P 500. As far as holdings, FTXG typically holds a diversified portfolio of companies within the food and beverage sector. These will include companies that manufacture, distribute, and sell food and beverage products. The top holdings are Coca-Cola, Mondelez, Pepsi, Archer Daniels Midland, and Kraft Heinz, which account for nearly 40% of the entire ETF. Other notably companies, such as Monster Beverage, Hershey, and Bunge, make up 4.14%, 4%, and 3.22% of the ETF, respectively. So who should consider investing in FTXG? Before sharing my final thoughts on that, please click the like button and let YouTube know that you like the content. Subscribe and click the notification bell to make sure you catch the latest videos. Your continued support means so much to the Food Fund. Now, let's get into my final thoughts. If you believe in the long-term growth of the food and beverage industry, FTXG provides diversified exposure to the industry. The quantitative selection and weighting methodology offer a standardized approach, but with this approach you get standard returns. Investing in FTXG would give you a return almost 5 times less than investing in the S&P 500. Ultimately, that 0.6% expense ratio, combined with the underperformance, makes me hesitant. It's crucial to weigh those costs carefully. For my own investing journey, I'm sticking with my current holdings, but I'm always open to learning about new perspectives. Many thanks for watching. What do you think about the First Trust Nasdaq Food and Beverage ETF? Please share your thoughts below. It is always great to hear from you. Please check out some more videos right now, and don't forget to put your money where your mouth is.